further ado, let's get stuck into our first session of the day. Please welcome to the stage Derren Martin, Director of Valuations at CAP HPI.
Hi everybody, it's good to be out and about, good to put my suit on again, although I realised I didn't need to. I did have a bit of dress code anxiety when I turned up, but good to see everyone. It's a bit unusual for me to be presenting to loads of people that I don't know. I've usually got dealers throwing things at me or manufacturers disagreeing with me, so if I could get the odd nod of the head when I say stuff, that'd be really helpful. So I'm going to build a bit of a story around electric vehicle volumes and values, hopefully paint a bit of a picture for what's happened over the last few years, really. And it's obviously all volume related to what's happened in the used car market, and hopefully show you some things that will be particularly interesting. So that's my agenda. I can't see that screen down there either. So battery electric vehicle, new and used car volumes, sort of the evolution of those over the last few years. And then used car valuations, which is very much peaks and troughs. The last 8 months probably been one of the most interesting times of my career. I've been at CAP HPI for 10 years now. We're part of Solera Group. Hopefully you're aware of us and our place in the market. And then a little bit about what happens next. So new and used EV volumes to start off with. So battery electric vehicle, new vehicle registrations. I'm going to get a sore neck looking up there. But you can see how that's increased over the last few years. No surprises to anybody, but considerable increases. I guess what is a slight surprise, 2020, the big increase there, obviously that was a COVID year. Registrations very heavily affected, but still huge increases in battery electric vehicle registrations, and they just keep on going. Last year, the volumes were 7 times the amount in 2019. Pretty much all the models that are coming through are EVs, a lot of them SUVs as well. Interestingly, around 20% of these are Teslas. So I think if we did that poll from the start, how many of you came here in a Tesla, they'd be probably quite high as well. It obviously remains very popular cars. And there are now nearly 800,000 pure BEVs on the UK roads. And you can see the registrations, that's to the end of May. I believe the June figures will come out, and from what I saw, the percentage of EVs within that will be around 18%. So the park is growing. I just wanted to show this. I was looking for some stats on where these cars are. The difficulty with this is that most of them, as you're probably all aware, are registered to fleets. If you look at some of the numbers on there, I think I can. So 50,000 is the dark areas on here. Compare that to private registrations, that's 4,000. So it's really hard to tell where they are from a fleet perspective, but although this is a geographical chart, it just shows you the volumes that are for company cars. That's where the incentives are. The incentives aren't necessarily there for retail, and I'll touch on it later, but the incentives very much aren't there for the used car buyer. But you can see on this retail chart that there is a focus around sort of the southeast and the Midlands, Sunderland, where the Nissan plant is. But there are also areas where there are very few of them, which tends to be in the more rural areas, where diesel still very, very popular, petrol still very, very popular. And I think there's a chart later on in Paul's presentation that will kind of show where the repair networks are as well. So it'd be interesting to see if it matches up. But you can see there's definite hotspots for where these cars are. Moving on to sold volumes. So at CAP HPI, we deal mainly in the trade. So we get data from auction companies, rental companies, leasing companies, manufacturers who sell used cars to dealers. So it's trade rather than retail. You can see there the increases in the volumes that we've received since 2018. So 2021 and 2022, over 100% increases. So this is sold data. Cars are selling, but they're selling at a price. And this year, so to the end of May, again, haven't closed it off for June yet, 70% of last year's volume received in the first 5 months. So this is cars selling in the used car market. And looking at it by month, you can see the huge increases there. And sort of remember this chart when I start talking about values, because around this time, we're seeing some peaks. So this is last year, around June, July, and you can see a ramp up of volumes. And that's based off those new car registrations from 2020 now coming back into the market. So 3-year-old cars, a bit of a pent up cars from last year as well coming through. but they're starting to come back in bigger numbers around this sort of time. You can see, if you compare that to previous years, just how big those increases are and how the market has got to get used to buying and selling these cars. And then this year, even though the market has been under pressure, a bit of a spoiler for what comes next, but I'm sure you're all aware, they have been selling, and this shouldn't be a surprise, the volumes that are there. They've been selling, but they've been selling at a price. And there's a lot more that aren't selling, and there's a lot more that are going on extensions and secondary leases. So they're going to come back older, higher mileage, maybe need more repair work doing to them. A lot of leasing companies are hanging on to them because they don't want to sell them now because they make such a loss because of the value moves over the last 8 months. So used EV values, this is the real story from my perspective and where we come from at CAP HPI. So last few years, so just to explain this chart, this measures 3-year-old cars that would exist at the beginning and end of a year. So the same type of vehicle, but at the same age and mileage point at the start and at the end. So there's no new models that come in that could uplift the figures. So we would expect somewhere between a 3 to 5% deflation. Cars are aging in their life cycle, and it's down to supply and demand. So as I say, measuring the same sort of basket of vehicles and how their progression in the used values. So look at 2015, bang in the middle of that 3 to 5% that we're talking about. So 2016, 3% down, again, within that range. Then a fairly strong year, 2017, just a 1% drop. So a 3-year-old car worth 1% less than a 3-year-old equivalent car at the start of the year. Then we had a strong year. We dubbed that the year of the used car. Values went up. It's really unusual for values to go up. Cars, as I say, they get older and they deflate. Cars depreciate in price. So a strong year, 1.7% up. We then had what goes up must come down. So 5.9% drop. So in 2019, values dropped, especially around this May, June time, but it then recovered to a degree. Then the world changed. We came to 2020, COVID. We didn't move values for a couple of months because there was nothing happening. If you cast your mind back to April, May time, 2020. So very flat year, and then quite a strong year after that when values kind of steadied off and went up slightly. So 1.9% up at the start of the year to the end of the year to the start of the year. We didn't predict that to happen. Nobody quite knew what was going to happen coming out of COVID. And we certainly didn't predict this. So I used to love showing that on Teams and just seeing someone's reaction when we were doing it and when we were going through that and living through that in our valuations world. It was almost like sort of being on the stock exchange. They just can't keep happening, can't keep going up. 6-7% increases in a month. We're usually dropping them by 1.5%. So some incredible increases. Cars worth 30% more than they were at the beginning. Just put that into pound note terms, some incredible increases there. Then last year, a fairly normal year for valuations, probably not for anything else, but fairly normal. 2022 ended up 3% down, so relatively sort of normal from that point of view. And this year to date, we're actually in a state of inflation, 0.4% up compared to where they were at the start of the year. And if you ignore those unusual years, the COVID year, the year of the used car, as we called it, and then 2021, it's actually the strongest year. What I'm going to talk about next kind of just shows how strong petrol and diesel values have been within that, because it hasn't been across the board. So this is by fuel type. So this goes back from the start of 2021. So those increases, that 30% increase, and this is by fuel type. So pure hybrids at the top increased by 34%. This is obviously averages. We look at all of the vehicles that fall within these fuel types to see how they've fared. Petrol and diesel, as I mentioned earlier, diesel still has a place, still performed very, very strongly. EVs, they went up as well. They're already expensive and they went up as well. Obviously not so many of them in the market at that point in time. But then think back to that chart where I showed those volumes increasing. And around that time, September, this is what's happened since. So BEVs have dropped an average of 37% in 8 months in the used car market. That's at pretty much all age and mileage points. They've just gone absolutely through the floor for various reasons. Supply increased, as I said. They were very expensive, a lot of them compared to ICE cars, some of them around £10,000 more. There was a lot of bad press around queuing at Gretna Green to get your car charged. Electricity price went up, petrol prices came down. All of these were kind of the perfect storm for demand from consumers dropping. And then that spooked the dealers, weren't buying cars. Tesla dropped their new car prices in January. We don't think a lot of that caused this. This was already happening, and it's all down to supply and demand. But Tesla dropping their prices couldn't have come at a worse time. It just kind of spooked the market even more. There were dealers that had cars that they'd bought at previous prices that were making huge losses on them. They weren't selling them. They didn't know what to do, so they certainly weren't buying anymore. I spoke to a dealer group, as an example, small dealer group. In the end, they sold 5 EVs for a loss of £26,000. So not making money, actually losing money, because the retail prices came below where the trade prices were that they bought the cars for. An incredible time. And this just puts it into context. So this is at 3 years old, cars at 3 years old, 30,000 miles, and this is the last 12 months. So Renault Zoe has come down almost half of its value in that time. I've just highlighted some of the sort of sweet spots there. Some of the £20,000 off a Model S. Off a Model S. £24,000 off a Model X. This is at 3 years old. So if you think about a 1 year old, how much have they come down by? And then you look at the Model 3, come down by £12,000, but that's now at £27,000. This is at 3 years old, 30,000 miles. If you add a bit of miles onto that, it's a lot cheaper than that. So they are now in the market and they're very competitively priced. And what we're seeing now is an uptick in values of Teslas, whereas others have still got to realign. If you go in to buy a car, you want to buy an EV. Some people do, some people don't. It's still a bit of a complicated ownership cycle to own an EV. But if you go in to buy one and looking for a Nissan Leaf, and then someone says to you, well, for an extra £150, you can get a slightly older Tesla Model 3. What are you going to do? I always say this, no one goes down the pub and says they've got a Nissan Leaf. People go down the pub and say they've got a Tesla. I should think everyone who's got a Tesla tells someone they've got a Tesla. So it's just the market now. Everyone will ask me what happens next. The market is kind of realigning. EVs aren't going to keep falling down. Some will uptick, some will keep coming down. Cars like the Honda E came down 8% last month. The Leaf keeps coming down. The Renault Zoe keeps coming down. They're kind of all realigning, and the Model 3 has kind of become a benchmark vehicle within that. So this is the last 6 months, and this is at 1 year's 10,000 miles, and there's no Teslas on the list. So everyone says that Teslas maybe caused all this, but they didn't really, and they're now recovering. They're not on this list at all. So you can see some of the others that are dropping in price over the last 6 months. Tesla's dropped early and have now flattened and are now recovering. So again, some huge drops there. You think 40% coming off of Seat Me. So people who have bought these cars at their peak, the best thing is not to sell them, because they are, if they don't sell them, they're not going to realise those losses. But dealers in the dealer network, they need to sell them because they've got them in their stock. They're not going to make any more money. They're not going to go back up again unless, and if they do, they're going to go up very slightly, and it's all going to kind of realign. This just shows graphically over the last year. So as I say, Tesla Model 3 benchmark vehicle, that's gone from £45,000 at 1 year old down to £30,000 at 1 year old. Whereas other vehicles haven't had that same pain. The EV6 was £6,500 below. It's now 13 grand above a Model 3. So that's what I mean about things have got to realign in the market. EV6, by the way, an absolutely fantastic car, but it probably now looks expensive versus some of those other cars. And others within that, they've got to kind of realign as well. So that's what I'm talking about. There's going to be some more pain to come for some models, but some have definitely dropped and by enough, and will probably uptick depending on volume coming through. And obviously there's plenty of that. So what's next? So this is the UK vehicle park forecast for EVs. So at the moment, we're in 2023. This is going to end, so 800,000 in the park at the moment. This is based on obviously registrations previously. Some will have dropped out of the market, but this is kind of what we forecast there to be, with more registrations coming this year. But you can see there where it was, where it is. So just 2 years ago, we're kind of 3 times that amount now. 2% of the market at the moment. It's going to be 7% of the market by 2026. 2.5 million, and that's over 1.5 million more EVs that will be on our roads in 3 years. There's loads of these coming, and it's a really volatile market out there. So for used values, so there needs to be things like consumers need to gather their confidence in buying them. Dealers need to gather their confidence in buying them. There's talk of the government needs to incentivise the used buyer, because there is no incentive for the used buyer. We have calls with the government. They're very keen to speak to us about what's happening in the market. Their view is all the value drops means that EVs are more affordable for people. They're not going to throw money at it. They think they don't think it's a good thing, but they don't realise all the losses that have been made within the industry. But they just say it's more affordable. You actually have people working for the government going, so I can afford one of these now. So I don't think there's any grants coming. What I think they need to do is improve the charging network, get people to less range anxiety, because that is still a thing. And as I say, it's a complicated ownership process. So just in summary, retailers are cautiously buying again. They were pretty much buying bans for a while. They are now back in, but they're buying in small numbers. There is money to be made, especially for franchise dealers, and some manufacturers are putting incentives against it. They're offering free home charges, finance deposit allowances, things like that. Consumer interest is increasing slowly. We haven't got the same issues as we had in the winter. Electricity isn't as expensive. It's not as cold, so the range isn't as affected. And now, obviously, EVs are now a lot cheaper than they were. So they're a more attractive purchase for the consumer. So we talked about those £10,000 above, EVs being £10,000 above a petrol vehicle. Some of them are now £5,000 below and still not selling in enough volumes, but they are an more attractive purchase. A Golf E versus the equivalent Golf petrol, £5,000 below. Mokka E versus a Mokka petrol, £5,000 below. So there are opportunities out there for dealers. You can tell I'm usually used to presenting to dealers, can't you? But as I said earlier, some models continue to fall. Lower range, lower priced cars have been under particular pressure because they're competing with the aspirational ones that have dropped. So Honda E, not great range. Seat Mii, Renault Zoe, they all came down. Well, I think the Zoe came down about 5%. The Honda E and the Seat Mii, 8 or 9%. That's thousands of pounds. They're still dropping by that amount. As hopefully I've showed, plenty more volume of EVs to come. No incentives for the used buyer, apart from the cost now, the price of them. And you need to, lots of people are EV drivers in here. You have to think about your journeys. You can't just jump in the car. I jumped in my petrol car today, thought, I need some petrol. You can't do things like that. So they need to get back to doing that. They need to start thinking about it, and the dealer network needs to as well. Range anxiety, remains. Bad PR for EVs hasn't helped. Rowan Atkinson recently in the press saying how bad it is to own one. Quentin Wilson coming back at him for it. But it spooks people. It makes people think. We are, however, expecting a more stable period for EV values. But as I say, there's going to be volatility within that. There's more of them coming back, but the prices are now more reasonable. They can't keep dropping by 40%. So there will be some volatility for different models, but they can't keep on coming down like that. But some further realignments are likely. But then longer term, there's more of these coming through. The ZEV mandate, 22%, it's likely to go through. 22% of registrations for manufacturers need to be EVs from next year. At the moment, as I said, for June, I think 18% is the market share, 22% for all of them. They can share between each other, but, they can sell them to each other. Tesla are going to be very popular, but that's coming. That's going to force EVs into the market more, which forces more into the used car market as well. There's loads more of these vehicles coming in the build up to 2030, whether the 2030 ban happens or not. And that's me with 47 seconds to go.
Well, time, sir. There is a question. Thank you very much, good sir. What an opening. So there is a question come through on Slido. So Nick, if you can pose that.
Derren, I think you really articulated this at the end. First of all, congratulations. I thought that was fascinating. But presuming the 29% rise is still built into the 2023 car pricing, do you see a similar dramatic fall in the near future?
That's a really good question and something we get asked a lot. And the main answer to that is no. And I can understand why it's asked, because that's what happened to EVs. But we've lost, I think, nearly 2.5 million cars weren't registered because of COVID. So there's less cars in the market. So in our opinion, we have reached a new level for used car prices. They will come down. That's a fact of life. Cars deflate, cars depreciate, but they won't come down by 30%. They'll come down by normal amounts. And they're now just at a more expensive level.
Thank you.
Super. Derren, everybody, thank you.